If you've ever wondered, how can I afford long-term care insurance? I'm going to show you how you might be able to use the current life insurance that you have and leverage that into some sort of long-term care coverage. Hi, my name is Joshua Music, and I am the owner of a company called Long-Term Care Architects. What we did was we looked around the industry and we said there's no one teaching people how they can do this, how they can plan for long-term care coverage. Because at the end of the day, we know that there's somewhere between a 52 to 70% chance that someone's going to need long-term care coverage. Every 6 seconds, someone is diagnosed with dementia in this country. This total spending on long-term care coverage has increased over the last 20 years from $35 billion a year to $200 billion a year. Okay, it's a massive industry. There's a lot of confusion. There's a lot of lies, and there's a lot of insurance agents out here who are still peddling what we like to call traditional, broken down long-term care insurance. I want to show you a different way how you can plan for the future. Okay, so this is a client that we worked with, just wrapped this up a couple of days ago. And she came to us and she said, hey, I've got 4 or 5 different insurance policies. I don't know much about them. They were sold to me over the years. They had different purposes at the time. And I want to consolidate that, and I want to see if I can use that, any of that, for long-term care insurance. Okay, so we said, sure. So we got some signed authorizations. We sent off, we requested what's called an in-force policy illustration, got it back. And what that was is it basically told us the line item, number by number by number, how her policies were set up. So let me walk you through that, and then let me show you how we transitioned that into long-term care coverage, and then show you how you can do the same as well. Okay, so her first policy had a death benefit of $20,000, had cash value about $12,000. She was paying $35 a month into it just because she'd been paying this since 1997, just $35 a month, $35. So again, now she knew. Policy number 2, $9,700, had cash value. She wasn't paying any money into this. Some of you, I guarantee you have some insurance out there that you're not paying anything on, just the cash value is supporting the death benefit. Policy number 3, $35,000 death benefit, $9,700 in cash value. And then the last policy, which was kind of the big one, was $150,000. Okay, had a small amount of cash value because it had only been issued just a few years ago. Okay, but this one, she was pumping $180 a month in. Okay, now she had 3 whole lives and a universal life, but it doesn't matter if you had term insurance or whole or universal or any type of insurance you want. We can use most of them and leverage that into long-term care. Okay, so she was spending a total of $280 a month. She had $28,000 worth of cash value, meaning if she surrendered all those policies and said, forget it, I don't want any more of it, she could pull that $28,000 out and it'd be cash for her. She also had a death benefit, again, $215,000. The annual amount she was spending was $3,360 on insurance. Okay, so what we did is we told her, let's do a 1035 cash exchange. I don't know how many of you know what that is, but basically it's a section of the IRS code. And it says you can take cash values from any life insurance policies that you currently have and move them from policy A to policy B with no taxes paid, as long as the insured on policy A is the same as the insured person on policy B. Okay, so we said, hey, what are we able to do? So we went to the drawing board. We represent 98 different insurance carriers. Okay, so everything that's out there we can tell you about. So we went to the drawing board and we said, we've got a lady that's got about a $28,000 dump in from 1035 cash exchanges, and she wants long-term care coverage. Okay, so we found a company. About 30, 35, 40 days, we got her approved at the carrier, and she was able to qualify for a $250,000 death benefit. Okay, meaning her insurance, if she were died in a car wreck tomorrow, would go from $214,000 up to $250,000. So $250,000 death benefit, and we added a rider on it. Now, a rider is just a fancy term for the word, like an enhancement. Okay, so if you add a rider to something, it enhances a policy. This long-term care rider allowed her to tap her death benefit up to $10,000 a month. Okay, so let's say she went into a long-term care facility and needed $8,000. She could pull $8,000 a month out of this. She needed 10, she could pull $10,000 a month. Okay, so it's a long-term care rider that's attached to a death benefit. So it turns into a benefit pool. Okay, this is a universal life sort of policy. Her total premium outlay was $333 a month. So she went from $280, right? Spending $280 a month. We took the cash value from her current life insurance, transferred it into this, and now she only spends about an extra $50 a month. Okay, she's got a bigger death benefit, and that death benefit can be used as a pool for long-term care insurance down the road should she need it. So now what she's doing is she's building an asset, a tax-free asset. That money's going to either be left to a spouse, it's going to be left to beneficiaries, or it's going to be used to cover the cost of care. So the moral of the story is, if you have some policies that you're saying, hey, I don't really know much about them, let us know. We'd love to help. Okay, we can send off some authorization, get some requests, and really go line by line saying, what do you have? And then is there a way to take the dollars that you're spending, along with possibly any cash value, transfer that into a new life insurance policy that has a long-term care coverage benefit? That way, you know that down the road, you have a long-term care catastrophe come up, you don't have to worry. Okay, all the bills will be taken care of. You're going to have money set aside for that purpose. If there's one thing that can come back and bankrupt your spouse, bankrupt your estate, it's a long-term care event. Got a client who was a nurse, and for years we begged her to buy long-term care insurance. She never did. She went into a long-term care facility, and for 7 years, they paid about $8,000 to $9,000 a month towards this long-term care insurance. Spent $500,000 on long-term care. Okay, and about bankrupted their family. So this is a real reality, and it's something you need to plan for. But what our recommendation is, don't purchase just long-term care insurance. Start building an asset that is used either for the beneficiaries as life insurance or can be used as a long-term care monthly benefit should you need it. So let us know. We'd love to help. Click on the link below to get in contact with us. We'd love to set up a 10-15 minute call and just learn about how you are currently structured and how we can help.